attendees. How are you? Yeah? Well, thank you all for being here, especially after lunch. I am jacked up on 3 shots of espresso, so you're welcome. Really excited to be moderating this panel with these esteemed colleagues and subject matter experts in the field. I'm going to just do some quick introductions of my, again, esteemed panel. And what's really great about this group of people is, we are well positioned and experienced to really be talking about taking the cash out of cannabis. And, all of us frequently contribute our knowledge and our expertise to, through various platforms and publications, including American Banker, the Green Market Report, and some other podcasts that you might be familiar with. So I am joined on your right, Tyler Beuerlein. He is the Chief Strategic Business Development Officer at Safe Harbor Financial. Tyler has a unique vantage point of being involved in many aspects of the business, and prior to Safe Harbor, he spent nearly 8 years with Hyper on the financial services side of the cannabis industry, serving the industry. And so thank you so much for being here and
thank you for having
coming from far away. So
yeah,
appreciate
great
you
to
being
be here.
Paul Dunford, to my left as well, you're right, co-founder and VP of Knowledge at Green Check Verify, Green Check. Paul is recognized as a leading industry authority in the field of cannabis banking, and he continues to set educational benchmarks in the industry with creating programs such as the Accredited Cannabis Banking Professional Certification and the strategic development of the Green Check Verified Compliance Engine, which has revolutionized how financial institutions engage with the cannabis sector. Welcome, Paul. Thank you again for coming all the way down from Connecticut. We are very excited to have you here.
Thank you.
Dustin Eide. He is the CEO of CanPay. Thank you so much for joining us as well. Dustin brings several years of experience and understands the hyper-competitive payments industry, which he has served over thousands of retailers and e-commerce businesses, banks, and technology partners with creative payment solutions. He saw the opportunity to build the first legitimate debit payment platform for the cannabis industry when Colorado and Washington legalized their adult use marijuana program. That was back in 2014, I believe. Mm-hmm. He went on to found CanPay in 2016, and the company now serves more than 800 participating cannabis businesses, including 10 of the 13 largest publicly traded MSOs, and thousands and hundreds of thousands of consumer members across 31 state markets. Thank you for being here.
Thanks for having me.
Awesome. So, my name is Jennifer Makris. I am the Director of Banking and Compliance with Cannabiz Media. My background in the industry started about 5 years ago when I was working with cannabis-friendly financial institutions, logistics providers, right? So moving cash from point A to point B. The Brinkses and the Loomises of the world cannot and still cannot legally do that. And then once that cash is on site, how are those operators safely and securely handling the physical touch points in that cannabis cash process? And so I consult in that space, privileged to be part of the Cannabiz Media team, working with FIs on verification, compliance, and marketing. So thank you all for being here. Thank you for having me. And we're going to get right into some questions with this distinguished panel. And so my question is actually going to start off with, let me flip to my question. My first question is actually going to go to Dustin, but before I do that, I would love some participation from you all in the audience. So who here is in the banking space? Second row, whoop, whoop. All right, fantastic. All right, so thank you. And then who all is in the maybe the payment space, digital payments, payment solutions? Got my PayRio friends in the front. All right, my friend David in the back. All right, with on the crypto side of things. What about ATMs? ATMs, cashless ATMs in the back row. All right, very good. So I guess my first question to you, Dustin, is when we talk about how to cash out in cannabis, what does that mean to you?
I always look at it as what is the best way to handle all the cash that we deal with in this industry. And to me, cashing out means probably about 50% of your business in this industry, right? 50% is going to be cash right now for most people, for most businesses, and the rest is how do you get that into the bank without having to actually handle the cash? And that is why we developed CanPay. That's why we built an ACH-based platform so that we could be transparent, reliable, and stable, and allow merchants to transact in their own name. And that's been the pathway that we chose in 2016, and we stuck with that. And now it's allowed us to serve 1,150 businesses now.
Nice. So it's interesting, and why I asked that question is because each of us had a different experience when we talked about what does that mean. And so Tyler, I'm going to flip it over to you. When we talk about how to cash out in cannabis, what does that mean to you?
Cashing out is essentially just like it says, getting cash out of the system, right? I mean, I would argue that the cannabis banking issue has been as much a cash-intensive, highly regulated business issue as it is a federal illegality issue. And what a lot of people don't realize is there are industries that are perfectly legal that have been shut out of the banking system because they're cash-intensive, and that puts a huge burden on any institution trying to serve them. But for me, like, I think about how far we've come as an industry, and not to get like, you know, sentimental, but I remember a decade ago when this started, I remember the first logistics company for cash was a group of elderly ladies who were retired and decided to, you know, get minivans and transport cash around Colorado for operators, and they would put their schedule online. And we had to have them into the bank at the time and say, hey, look, we're worried about your survival here. And then, you know, another instance, one of the first meetings I ever had in the industry was with a bank CEO. We went to a guy's house in Colorado. He took us down to a basement in his house. You know, it was like the opening scene to a horror movie. And we walked to the end of the basement, and he'd buried a shipping container in his backyard. The door led into the shipping container. It was probably a quarter full of cash. And he said, hey, I need you to get this into the bank. And the CEO said, look, that's the biggest pile of petty cash I've ever seen in my life. It's not going to happen. And so we've come a long way. I mean, there are, you know, hundreds of institutions in the industry now, some north of 200 billion in assets. You know, if you had told me even 5 years ago that was going to be the case, I would have thought you were crazy. So anyways, long-winded way of saying we've come a long way.
And so when we talk about coming a long way, I think that's a great segue to my next question. And Paul, you know, so much has changed, excuse me, so much has changed in the cannabis banking space. In the last 12 to 18 months, I would say significant positive momentum with more FIs willing and opening up to banking cannabis and even hemp for that matter. From your perspective, what have you seen kind of evolve and change in that banking space?
That's an interesting question. One of the things that we've seen is, I would say, this move from Cannabis Banking 1.0 to Cannabis Banking 2.0. Cannabis Banking 1.0 are all the notorious stories we have of $5,000 a month accounts. It's just a place where you could put your cash. If you were blessed, you could write a check, and that was about it. And that was the expectation that people had about banking. And now, as we've moved forward, as there has been somewhat of a removal of the stigma, even among the regulatory community, we have this expansion of products and services. And that's where we get into some of the banking relationship with electronic payment methods. You know, what are the things that they want to see? What is it that still gives them some degree of pause? What are they willing to support? So what is the role of the financial institution in providing an expanded set of access to payment solutions? So we're far from just a place to put your money. We have market competition. We have this push now to push down fees. We have this competition of who can offer the most services. We're moving into lending. We're moving into a whole lot more things that you would never have heard about 5 years ago.
Very good.
Can I add just one thing?
Please.
I think that, you know, the common refrain is that the industry doesn't have access to banking, or that it needs more access to banking. And I do want to just point out that there are institutions that are taking on cannabis licensed businesses in every state, right? So we may still have some markets that are slightly underserved, but even that is becoming a thing of the past.
I would go a step farther and even say that there are some markets that are underserved. You know, Puerto Rico is one that's had some issues. But I would say that the market's gotten so highly competitive that we're seeing a number of institutions exit their programs now. And so I think that the continuation of this year into next year, we're actually going to see a compression of institutions serving the market for the first time in the 11 years that I've been in it. And again, if you had told me that 5 years ago, I would have thought you were crazy. So,
see, I would push back against this notion that everybody is banked that wants to be banked, because we have to agree on what that term means. Yes, maybe everybody has access to a place where they can put their cash, but how many of those people are going to Bank of America? And how many of those folks are just not telling their bank what they're doing? I would argue that's not being banked. I would argue that's making a deal with the devil of hoping that you can keep an account long enough. That's not banking. That is hoping. We're getting to a point now where there are financial institutions that say, yes, we will do this. We know how to do this. We can give you the products and services you deserve, as opposed to treating you like a third-class citizen. So with all respect to the other folks on the panel, I think it's weirdly self-defeating to say that everybody is banked. None of us would exist if everybody was banked. None of us would be in this room if everybody was comfortably banked. We've moved forward, but there's still a lot of work to do.
Yeah, and I guess what I'm trying to say is the business that's out there for the taking, it is coming from some of those people that were on the fringe that were trying to misrepresent and go to Bank of America. Bank of America is never going to bank this industry,
No.
you know? But I think that what I'm seeing anyways is the business that's there for the taking is being taken from other institutions for the first time in my history in the space. So it's, instead of going into a new market and saying, okay, well, we've got open water, now it's, well, we want those clients, and to get them, we've got to take them from institution X.
Yeah, there's market pressure for the first time,
Yeah,
which
there
is
is.
great for operators in a lot of states. Like, you can shop around. You don't just have to deal with the first person that comes around and says, yeah, I'll bank you. Like, that's great.
Yeah, it is. It's good for the industry.
And we require all of our customers, merchants, to be banking inside of a compliant cannabis banking program. We don't have anyone that even tries to submit a Bank of America or Wells or even generally a local institution anymore. If they don't currently have access to that, then we have banks that we can refer them to in every market. So we're not seeing a lot of that, at least because I think people are wanting to be more transparent, and they are drawn to, now that the pricing is more competitive, drawn to it.
I think there's something to be said about competitive pricing in the banking services space too. We were able to charge a bigger premium, a couple years ago, and now there's kind of some level setting in those fees. And I really do appreciate the FIs and the financial institutions that were first to market, right? They were willing to take that risk. I also appreciate the ones that have really baked out their program and taken a cautious approach to entering the market. And before putting the cart before the horse. And so when I advise my customers, it's, I really appreciate the ones that were willing to take that risk first and foremost. You want to feel comfortable referring them. And then you also don't want to be, hey, my FI is exiting the space. So now I'm screwed and I have 30 days to move over all of my stuff. What do I do? Now I'm in a panic. And how do you advise them appropriately? That's been something I've been seeing more and more frequently. And to that point about exiting the market, Tyler, I know you were quoted in, I don't recall if it was a publication or something with regards to Safe Harbor, but it was of those banks that are willing to, ready to cash out or exit the industry, how you help them and what that looks like in terms of exiting, which seems kind of premature considering, here on the East Coast, we're a lot more, we're an evolving market, we're an emerging market as opposed to the West Coast. But there are banks that are willing to already exit the market, which in my opinion is a little premature, but there are ones doing it. So kind of what's your experience? What does that look like, and how does Safe Harbor help with that?
It's happening more and more. I think it's dependent on the scenario. So we've had a couple of situations where a regulator went into an institution and basically determined that they needed to get out. And so we came in to help them migrate that in a seamless way for the client base. But I think we're going to see it more and more, like I said. And I think that some institutions are going to try and sell their portfolios, which is great for them, I guess. But the biggest thing is we always try and tell people, like, you need to make this a seamless transition for your client base because they've already been through hell, and how do we make this a win for everybody and salvage your relationship in case down the road you want to get back into it or something changes or you want to keep that relationship strong. So every situation is different.
Definitely. Anybody else want to add to that, Paul?
Yeah, I would say that we also have to remember that at the end of the day, this is a business decision that a financial institution makes. So it has to be compelling for them to bank cannabis. And that is separate from whether they should or whether they want to. And so it's really important that folks in this room understand that no financial institution has ever been told by a regulator that it cannot bank marijuana because it's marijuana. They have been told that they don't have the controls in place or they are not doing it in an effective manner. They're failures of their Bank Secrecy Act anti-money laundering programs. It's not because of marijuana. And so, yes, we see people leaving, and yes, sometimes they're counseled by, their boards to say, this isn't for us, but it's not because you can't do it. It's because it's a business decision. And I know that's frustrating to cannabis operators to say, look, it's this huge industry, it's $100 billion. But if you're a community credit union that can only work, within 2-3 states where people live, work, worship, is that really going to be advantageous to take on the risk to do that? So I just feel like that's an important piece of context that sometimes gets lost. No one's being told not to do marijuana. It just sometimes doesn't make business sense.
Paul makes a great point, and I think it's important, and I don't know if you guys would agree with this, but I'm a firm believer that if this went federally legal tomorrow, the banking climate isn't going to change much. Because again, it's a highly regulated, cash-intensive industry. That compliance burden doesn't leave the institution, and the regulators that examine them, they're not going to change their stance either. So the people that think this is going to be some giant panacea, now it would bring the branded card networks in, which would help, but it wouldn't change much from a banking standpoint.
Yeah.
I would agree, and I just want to echo, I don't think enough of us have thought about, regulator didn't tell you that you cannot bank an MRB or a CRB. It is from a risk and compliance perspective and that internal conversation, that business decision, whether to pursue that. And I've never heard anybody put it that way, so thank you for putting that in, and hopefully that really landed with others in the audience as well. From a risk and compliance perspective, let's talk about again, taking the cash out of cannabis. That could really lend to a couple things. So I'm going to kick it over to you, Dustin. With digital payment options, digital wallets, tap and pay, what do you see as the relief of taking the cash out of cannabis through some of those digital offerings?
Well, yeah, that's an interesting question because the card brands have been very specific that they will not allow their cards, their brands, or their networks to be used in cannabis. But we all know that you can walk into many dispensaries and use your debit card or use your credit card to load a gift card to then make a purchase, credit for crypto, whatever it is. Those solutions exist, but they also keep getting shut down. And we've seen that massive shutdown of the PIN debit network last October. We've seen regular shutdowns of other PIN debit cashless ATM solutions over the last few months. And so when you talk about getting the cash out, sometimes the short-term gain of access to a solution that is ultimately going to be shut down is not worth the pain to go through that shutdown, now getting the call on either Friday or Saturday or Sunday, finding out that your terminals are going through an update, and you have to now deal with all of that cash again, or call your ATM vendor because you don't have enough bills in your ATM, and you have to have just the right bill, not too new and not too old, so that they feed out. It's a mess. And so, I think that's one way that operators try to decash, and it's painful when it doesn't work. I think that always having stability, at least as an option, if nothing else, is the way to go, because your operations need to be efficient as an operator. And you need to have something that your customers can rely on.
I think it's such a double-edged sword as well. You want to be competitive with the other guy down the street, right? Yep. They're offering a PIN debit, they're offering a cashless ATM. But the operational impact when that goes down, you are losing the transactions at the point of sale. Your ATMs are now depleted, to your point, Dustin. You don't have ATM fit currency to fill your ATM, nor should you really have access to your ATM. Let's not commingle the cash, your operational cash, your ATM cash. Let's not cross those lines or cross those wires. So there's so many, the ripple effect or the domino effect when a cashless ATM goes down, and it happens all too frequently. And then now you're just losing out, right? There's revenue, and if you're using a service to fill your ATMs, or you're using an ISO, an independent service operator that's got cash in the back of his car, and he's filling your ATMs, but now he has your full footprint, and he can't go from Miami to Pensacola in a day. So how much are you losing out by trying to skirt it or taking the shortcut? The industry is still cash intensive. I guess let's segue into rescheduling. Let's touch on that first. So what that would look like please.
I just want to add one thing to that. We even saw recently where the ATMs also, the actual cash dispensing ATMs went down along with whatever the payment service was in the store. So they had no ATM and no other alternative payment method. So now you don't have any way for consumers to actually obtain currency to pay you in the stores. There's risk involved in both.
So were those terminals connected, the ATM terminals? Let's talk about that.
Yeah, so Jen, I just wanted a couple things payment related wise. And I just literally had this conversation 10 minutes before this. Look, credit cards, if you're offering credit cards in a dispensary, you've committed fraud, period. Okay, and I know that nobody wants to hear that. It's the honest to God truth. And there's been precedent for that. A couple other things that I just want to kind of put out there. There was a Visa memo that came out a couple years ago about cashless ATMs. It was not a fake. There was a MasterCard one that accompanied it that most people don't know about. The reason cashless ATMs keep getting shutting down is because they're not permissible. Now, I understand people play the game. I've probably seen 500 payment companies over the last decade come and go, right? And in the cashless ATM world, there are so many things that happen behind the scenes because everybody's playing whack-a-mole. The networks are going after it. They're pursuing it daily. I know that unequivocally. And so there's this cat and mouse game that happens, and I understand people want a card-based product. Is it ridiculous that we don't have one? Sure, it is, but that's the reality of the situation. I just think that, and then to Dustin's point, with the physical ATMs going down, some of the cashless providers started to use the same terminal IDs as the physical ATMs to try and navigate this process that way. And it blew them both up. And so, I understand there's a need, just be careful and understand what you're getting into and understand what the ramifications are. And to Dustin's credit, I've known him for a long, long time. ACH is the only thing that's going to be truly permissible and won't get shut down unequivocally under any circumstances. And so he's never wavered for that, even though it would have been really easy for him to do that, and probably much more lucrative. But that's the only method today that's going to be sustainable long-term. Not a stored value, not credit, not cashless ATMs. Again, I don't mean to, infuriate anybody, but that's the truth.
Yeah, I would add that in cannabis, we often think about the should, right? Like, we should have access to credit cards. We should have access to ATMs. Should is great, but when you start dealing with anything in the financial system, you get real legal real fast. And should does not play a role in this. So when any of us are talking about a solution and it sounds like we're dogging your solution, we're not. We're talking about things that we have heard and seen directly from regulators, what we've seen in the field. Like, the world of should has to escape this conversation. Like, miscoding on cashless ATMs. Like, yeah, it's a thing. It's not a moral statement about cashless ATMs. They are being miscoded. That is fraud. You should not do that. So I just want to add a little bit of context to that there.
I guess in another context, you should be patient and wait for things to kind of pan out and change. And so let's kind of take that conversation to maybe other forms of payments which we haven't touched on, permissible or not, crypto.
Won't happen. Sorry, I didn't mean to. So I'll tell you a story. I was with a certain regulator, very powerful one, and this person asked me in front of a room of examiners what I thought of crypto in the cannabis industry. And I said, you're trying to combine one highly regulated industry with another. It convolutes the problem. It's a non-starter. And this person slammed their fist on the desk and said, you're damn effing right. If we find out our institutions are allowing it, we're going to tell them they got to get out of the space.
Yeah.
That's the only conversation that matters. And so I've seen it attempted. I've seen it not end well, and it will continue to not end well. And again, I have no horse in the race. I'm not trying to be Debbie Downer here. That's just the reality of the situation.
Yeah, and we also have to remember that while it's an interesting solution, the financial institutions are still the ones that have to answer to their regulators. They can't just do whatever they want. And the people who really make sure that these cannabis banking programs are solid are the people who are compliance people. They're the people who are saying, okay, I need to make sure that I understand the source of funds. Where did that dollar come from? If you are using something like a crypto solution, you are inherently able to disguise the source of funds. And so a financial institution does not want to deal with that risk. It has nothing to do about whether crypto is the future. Crypto is built to obscure the source of funds. So a financial institution is going to be very hesitant to deal with it, and that might affect their decision to bank you as a dispensary or a licensee.
Anything to add? Moving right along. No,
yeah. I agree here. I think that it's interesting. Crypto is inherently transparent in one way, and inherently not transparent unless there are other mechanisms for identifying who the person is that's making the purchase. To me, the issue with crypto, the regulator piece, absolutely. I've been told the same thing as Tyler. But to me, the issue is that at some point you have to get a consumer who is paid in fiat, right, who deals in fiat, to somehow convert the value of their fiat to the crypto to then use it in the dispensary. We've seen some creative attempts to instantaneously convert, which is just basically, it is a purchase of cannabis with whatever the original funding mechanism was. So you have to get far enough away where it's actually a distinct set of transactions, and then you have to convince your consumers that they're going to buy crypto somewhere and they're going to use it at the dispensary. So just from a practical standpoint, we're not there on crypto either.
And he brings up a great point. It goes to a bigger conversation too. The networks have gotten very wise to what they call ins and outs. So anytime you're buying something to load something, or there's an intermediary to then purchase federally illegal product, non-starter. And they're actively pursuing those type of solutions as well. So just understand that even if there's some kind of stopgap, that changes nothing. In fact, they view that as being even worse.
Well, and just to put that kind of in again, practical terms, right? If you think about it, most of these solutions, if you think about it, you can arrive at all it's doing is disguising a cannabis purchase. If it starts with an electronic means and it ends with a cannabis purchase, doesn't matter how it gets there, right? If it's using a prohibited network, card brand, or card, it's a purchase for whatever that final product is, and it doesn't matter who holds it. There have been attempts, say banks, where you would load funds into a bank account, and then those funds could be used separately for a cannabis purchase, but the purpose was to use them for a cannabis purchase. The network saw that as a cannabis purchase. It didn't matter who held the funds as an intermediate. It started with a card, and it ended with a cannabis purchase.
I think there's a lot more visibility to that whole kind of workflow, if you will. And I think one of the things that I really enjoy doing with my customers is just really advising them properly, educating them on the options, but also the impacts of whatever they choose to do. You know, I try to agnostically make some recommendations, and so I guess that would be a great segue into my next question. From an agnostic perspective, you know, take the CanPay hat off for a moment.
You don't want to see my hair underneath this hat.
You know, are there solutions that you endorse, just in terms of like from a digital payment perspective, you know, PIN debit versus the cashless ATM or the digital wallets? I guess maybe you obviously have a biased approach, but are there anything, and I'll pass it along to the FI panel as well, but.
Yeah, I'll acknowledge my bias, but my bias was arrived at through conversations with the card brands, through conversations with the regulators. I didn't pick ACH first. I arrived at ACH after exploring every other option. So my history is payments. I used to be involved in credit and debit card payments. If Visa came to me today and said, hey, you can do credit cards, that would change the game because we now have approval. They've said, the card brands have said, that look at Canada. The day it was federally legal, there was an MCC that was available for them to use, and those transactions flowed through on all 4 major card brands with no issues. So back to your question, if it involves in any way a card, a brand, or a network from Visa or MasterCard, or Discover or Amex for that matter, it's prohibited. Even an EMV dip, right? EMV, the M and the V are MasterCard and Visa. So if you dip the card, it touches their system, which then puts it under their rules. And they've been very clear. So it's not that I'm against any solution in general. It's that what I know and what I've been told, they're prohibited, and thus they won't be stable long term. They'll be expensive, and they are not for us. It doesn't fit our model.
Yeah. ACH is the best that you have.
It's the only. Yeah. It's the only one right now.
Yeah,
right. That fits all that fits the mold.
Yeah. Anybody else want to weigh in on that?
Yeah, I would say, you know, I just met Dustin. I have no financial relationship with CanPay, so I'm not, you know, like biased one way or the other. It's true. ACH transactions are the only legal way to electronically directly purchase marijuana. Because you have to remember, there's no federal law against using a card to buy marijuana. It is the subject of the operating agreement of the people who run those electronic networks. Visa, MasterCard, Amex, Discover, they all interpret their rules as saying no. They can change their mind at any time. They did in Canada, but they're probably not going to at any point soon. The ACH network is run by NACHA, and NACHA has neither publicly said yes or no, but I'm sure all of us at some point have been invited to a NACHA convention to talk about cannabis payments. NACHA tacitly endorses and allows this on their network. And so it truly is, at the end of the day, not an advertisement for CanPay, it is the legal, acceptable electronic way to purchase marijuana directly.
They've also helped advise the institutions that move money. And so they've been actively involved. Look, one of the other things I just want to throw out there too, and again, not to be Debbie Downer, but I remember we did a poll with MJ BizCon about what people were most excited about at SafePass. And probably 80% of the reactions were, we can't wait to use credit cards. And, you know, that's not accurate. There's a really high chance that that does nothing for Visa and MasterCard because it doesn't change the federal legal status of cannabis. And that's their line. It's in the, you know, it's plain as day. So I just, you know, again, I want everybody to be realistic about what legislation like that would mean for something like the branded card networks.
And I would throw in Schedule 3 too. Schedule 3 could be great for the industry, but it doesn't impact the legality of the state legal market.
And it doesn't mean card processing is going to turn on immediately either. Yeah.
Federal, the statement to me is when federal law changes, then look at Canada. That's what will happen. And Schedule 3 does not change, does not legalize the state markets as they are structured today. Lots of benefits for the industry in other ways, but not in terms of banking and payments.
They're looking for federal legality, period, right now.
Interesting though, I think that, while I don't disagree, I think that there might be kind of a pull to them that they can't push back against. You know, if we're at the point where rescheduling means that there are certain FDA-approved medications that are cannabis, that are sold, you know, that are federally legal, and we get to a point where you can go to a pharmacy and buy them, and you can use a card, they're going to have to reevaluate how they handle this. You know, will they toe the line that they have today? It's possible. Will they change their mind? It's possible. It's true, I don't think we need to hold our breath and say, if we get rescheduling, we get cards. But I think that there is a way that potentially credit card companies will sort of be dragged into it because of the ancillary effects of a federal medical market. But it's true, the state market isn't going to be something that pushes that forward.
Yeah, I could see them absolutely doing a pharmacy transaction like they do today.
Yeah.
But that doesn't fit, you know,
The dispensary model, yeah.
I think there's something to be said about looking at how other states have rolled out the transition from medical to adult use. So I'd like to just talk about that a little bit. I'm a big proponent of looking at what states did well or not as well as they could have when rolling out their programs. And then when we talk about, you know, point of sale transactions and impact at point of sale, for those of you that have been a part of the transition from medical to adult use, what have you seen change from that consumer transaction perspective? Have you seen more cash go into the business? Have you seen less cash, digital? What can we talk a little bit about that? I'll kick it over to, maybe we'll start down. You know, you've gone through a couple of transitions.
Yeah, what I've seen, and that whole conversation's kind of been interesting to me because every time a state, I've been there for a lot of them, they say, we're going to launch a really restricted medical market. And then the tax revenue starts rolling in, and suddenly chronic pain's approved, and your demographic's the 18 to 30-year-old male with turf toe, you know? And then they move to legalization, or the neighboring state legalizes. They don't want to lose the tax revenue, so they quickly do it. So it's been kind of a fascinating thing to watch. But I think in an adult use market, the thing that I've noticed anyways, and Paul may have a different take, or Dustin too, I've noticed that the cash transactions pick up pretty significantly because there's still somewhat of a stigma, I think, for some people that come from out of town. They don't want record that they were there, they want to pay with cash, and they want to get out of there, right? And so I've seen a little bit of that over the years, but I'd be interested to hear your take too.
Yeah, I think that we also have to remember that the way that people can buy cannabis changes. So in a medical program, you often have, like, you can buy X amount over a 15-day period or X amount over a 30-day period. So you know that there's only so much cannabis that's going to be sold. But when you get into an adult market, it's usually per day or per transaction. And so you have people going and buying more and more frequently. And those are the folks that are, probably bringing cash. They're really looking for electronic payments so that they can buy more. So it's just kind of economies of scale based on the rules around purchasing. The medical market is always going to be smaller because of the rules. An adult use market will always be bigger because it is more permissive.
Yeah, I'd say just in terms of the transaction, smaller transaction amounts more frequently, right? There have been markets where you could buy, medical markets where you could buy 90 days worth of product, right? So you only had to go to the dispensary or MMTC once every 3 months. That changes a lot when you have an adult use. We also see a greater aversion to fees at the payment side, because these are generally consumers who haven't grown accustomed to paying fees over the last however many years each market's been online. They come in, they want to use their credit card, they find out that they can't, and then they have to pay some kind of a fee to do it. And for us, we actually, it's interesting because it takes a little bit of time in a new market, and then we see a real ramp into our consumer adoption, in part because these are regular consumers that the fees get very expensive for if they're going every couple of days or some every day or every few days. It's very expensive.
Yeah.
I would say on the converse too, obviously we know ticket sales are typically a lot higher from a digital transaction. You only have so much cash, right, in your hand at the time. But also, like, what about the federal workers, right? And if you're an adult, an adult use state, and they don't want their employer to know that they're, purchasing cannabis, right? Or that want to, keep their digital footprint away from, again, the stigma, or just kind of being as discreet as possible. I think there's something to be said. And, cash is my wheelhouse, right? I am prepared to talk to and offer consult when things change, but cash is never going away in our lifetime, people, like our lifetime. And so we'll really need to know how to manage that cash. There is a cost and a risk to managing cash. I tell my customers, next to the people and the product in your store, cash is the most expensive and riskiest thing, right? So how do we mitigate that risk? And also there's gonna be an impact to cash in use and in circulation when things change on the rescheduling, but it's always gonna be in use and as a point of tender or a tender in the space.
Jane, one thing I want to bring up too, and this is something that it's not really, it's almost like an open-ended question, but one of the things that I'm curious to see is if and when the branded card networks come and credit cards are available, we've got an industry that's been conditioned to derive income from their cashless ATMs and things. So you have a retailer going from earning, let's say, $1.50 per transaction, and that's a huge revenue stream for them, to then paying 5 to 6% in a transaction fee, which it's inevitably going to be high. So I'm also curious to see how that battle ensues, because people don't really think about that yet, and that's going to be a huge impact. Like, they may get a lift in sales, but that doesn't necessarily offset the fees they're going to have to pay for those products. So just something to, again, for the industry to think about, because it's not going to be as simple as I think everyone hopes.
Fair.
It's like the delis that say, you can only use a card if it's $10 or more, right?
Yeah.
Like, they don't want to pay the fee, and that's understandable. Like, you buy a pack of gum and they have to pay a fee, they're not interested in that. Technically, that's illegal.
Right.
Yeah, I was gonna
Well,
say that.
it's against the card brand rules, right? And the card brands are going to absolutely be looking at this industry and monitoring it closely. So you won't be able to do things like that.
Let's shift over to some banking-related content real quick. When we come to cannabis banking and managing cannabis banking and implementing tools, I know you've been quoted in talking about some managed services or managed tools on the green check side. Can you speak a little bit to that for our folks that are FI-centric in the audience? Just what tools you recommend, certifications, compliance, anything like that?
Well, this is going to be where I'm inherently biased, but I have kind of a funny title. Like, it's VP of Knowledge, which is the problem when you're allowed to choose your own title. But it's because so much of this is education and helping people understand what the options are, how they can do it. You can do this in a compliant way, but it's difficult to know how if this is new. So, we did put together a certification, the Accredited Cannabis Banking Professional Certification, so people can feel comfortable in understanding how to do it. But one of the things that we heard, there was a great panel on accounting earlier. And they were talking about you need to move towards robotics and automation. Those are going to be the things that help you drive down costs. And if you're a financial institution, so much of this has traditionally been very, very manual. There is a huge cost to compliance. And I know that dispensary owners don't want to pay $500 a month for a cannabis banking account, but there is legitimately extra work that's being done by a financial institution to protect themselves. The more that we can expand into automated transaction monitoring or understanding that folks are still licensed, ways that you can automate compliance at a financial institution level, that drives down fees, that allows people to open up options to new products and services. That's really where you have to go. And the FDIC said this years ago, just in terms of automation, period. No human compliance officer can effectively monitor 10,000 lines of a spreadsheet every day to make sure that sales are compliant in any industry, in restaurants. And so you have to get technology, and you have to get technology that understands cannabis, because the big kind of off-the-shelf ones like Verifin that are currently used for transaction monitoring, they're great, but they don't really have specific rules around marijuana and cannabis. So automate with a cannabis-specific solution, drive down your cost of compliance, drive down the cost to the consumer. That's where we have to keep going.
And just to kind of continue that point, there is so much manual time and effort that goes into managing cash, both on the dispensary side, right? You're paying people to count your tills, prepare your deposit. That's time. And so, labor equals money, and that's an expense. And so if you can implement cash management technology and implement hardware to automate that process, I'm giving you money back, right? I'm saving you time on your labor expenses, your overhead, but also from a security perspective, because I mentioned the cost of managing cannabis cash carries a cost. So if I can help people reduce that on the physical touch points, now I'm saving you on theft, I'm saving on exposure, I am giving you time back to serve your customers, customer experience, but also think about once that cash leaves the dispensary. Where is it going? Is it going to the FI's cash vault? Is it going back to the bank branch? Are there people that are humans counting that cash or putting it through the recycler? There's multiple touch points. So we need to bridge those gaps, bridge those touch points, and make it more efficient. So I truly echo your sentiment and your comment about automation and technology really does help the process in the entire ecosystem of managing cash. So I definitely agree there. And just one final point that I wanted to bring up was about, and it just totally left my frame of mind, access to capital. We talk about access to capital. It's been kind of a continuing conversation in multiple panels, but what does that really look like from an operations perspective? I know you and I spoke about this a little bit, Paul. Can you kind of elaborate on, that capital from a micro level maybe?
Yeah, it's been really interesting to be sort of in the second half of the second day and to have seen all the panels that have come before us. And they've been talking about investment and capital kind of with a capital C at that meta level. And there is at this micro level, you've already talked about it. What is the cost of cash to the dispensary, to anybody else who's involved in the supply chain? What money are you losing by not having access to compliant payment solutions? So we've talked about, what might this do for access to like the New York Stock Exchange? We also have to think about where are we going in terms of saving individual dollars that adds up at the dispensary level. Your point about if transaction methods change, if you're no longer getting $3 from every transaction and you have to pay Visa and MasterCard for that. Are you really thinking about that? Are you building that into your models about your profitability? Like there's a micro level question about access to capital that's affected by methods of payment.
Yeah. Anybody else want to weigh in?
I mean, I guess I look at that question a little differently. I mean, we lend, right? And so when you ask that question, I immediately go to the lending side because that's been a huge issue for our industry. And there are institutions that are getting into it. We've lent pretty heavily on real estate. But I've also, I've been fortunate to invest seed money into a number of licenses. And I see what those operators go through. And I think there's a huge gap right now for the newly licensed entities that don't have a business history they can provide or credit to get access to lending that's going to enable them to thrive. So you've got this gap where you have someone that wins a license, whether it be social equity or in a new market, and then they have to go raise capital to get their business open. Then they have to get 2 years track record to then be able to get access to cheap lending. And so I think that's a niche in the industry that's still painful.
I agree. We have a couple minutes for questions. I'm going to open it up to the audience for any questions or comments. Y'all, really, thank you.
I'm pretty surprised about how many dispensaries take credit cards, and so it's obviously a risk-reward trade-off. I believe it's high risk, but a lot of them are engaging in this, so just any additional comments on this as they see it being a pretty wide practice.
Yeah, I had a conversation with a retailer, and he's like, we're running credit cards, but it's because our competition is. But the problem is, there's been, case precedent for this. People have gone to prison for misrepresenting the nature of the business on an application. Typically, it's the sales organization, but at the end of the day, that dispensary has real risk. And if you look at the transactions from those, they never say the name of the dispensary because they're doing it under a shell corporation, and it is viewed as bank fraud. I mean, unequivocally. And so I guess, you have to make a decision as a dispensary, like, is trying to compete with my neighbor worth that risk? And in some markets, like in California, I mean, there are people that view it as a badge of honor when they get shut down. I mean, I've literally talked to retailers and like, yeah, it's our 5th one, and we're just going to keep doing it. I mean, that's your choice, but it's a risk.
I would offer up too that you're training your customer on certain behavior, and there will be a day where it is gone, right? And you may be able to get it up again at some point in the future, who knows when, but you've trained your customer. If the competitors isn't down, right, then your customers are just going to go where they can use their card because that's what they want to do. Our entire business has been the slow kind of build and help and be there. And it's important for operators to also help their customers arrive at this is the way to do it, and this is what's going to be always available to you. So that they don't have to go through that scenario where their customers are walking out the door because they can't use a card.
And I think that the industry needs to be better self-policing about this. There's always going to be someone who says, yeah, you can take cannabis cards. Like, trust me, I talked to Visa yesterday. They were cool with it. Just trust me,
We're
man.
the only one.
Yeah, we're the only one. I swear to God, I'm the only one. If I had $1 for every time I heard that, I would have a house on the beach in Florida.
We both.
But, that's the thing. It's because there's so much confusion in this industry, it's easy to exploit people's desire to, like, I just want the quick credit card. Like, they're ghouls, and that is terrible. But it's because this industry does live in a lot of gray areas. So I guess if there's one thing to say, if someone says, I got you, bro, you can do credit cards, they're lying, please run away.
Abort mission. Yes.
Could you explain the layers of hierarchy from the rail to say, I see if they were doing that there, to a leisure pay, to how this stacks up to the broker selling the service? Like, what are the layers in that?
You want to take that, or you want me?
Yeah. So, in traditional payments, and most consumers don't know this. They don't pay any attention to it. They don't have to. You pull out your card, it works, and you're done. But there are 4 major players. There's the card brands. There's the issuer of the card. There's the acquirer, right? And then between the acquirer and the merchant is a processor, potentially a sales organization, potentially a sub-sales organization or an ISO, and maybe a few more layers in your POS company to the merchant. And so anywhere in between those connections, so the Visa and MasterCard, their members are the banks, right? And that's the issuer and it's the acquirer. The acquirer is the one that actually processes the activity on behalf of the merchant. And the issuer is the one that obviously issues the card to the consumer. Now you can be, as an institution, you can be both the issuer and the acquirer in the transaction, right? So there's a lot of complexity in this. And at any layer there, you've also got sub-networks, you've got 13 or 14 major debit networks that are involved, some of them owned by Visa and MasterCard, so one major one owned by Discover. So there's a lot of intertwining of the relationships, and then back to EMV, which the technology utilizes MasterCard and Visa's gateways to interact, even if it's going to go through a sub or a lesser debit network. I just mean by lesser known debit network. So anywhere in those, in all of that complexity, you can have someone or an organization who is obfuscating the activity, right? And clearly between Visa and the banks, it's pretty rare, right, in that relationship. But there are so many parties involved that you can layer it in there and have it be hidden for quite some time.
But not forever.
Yeah, I don't think there's no card-based system out there today that was in existence perpetually since 2014. There's not one.
We're getting the X in the back of the room, which means we are out of time. And here I thought we were not going to have enough content to talk for an hour. But we really appreciate you all attending and coming, and hopefully you found value in our conversation. My takeaways were, education, ACH, automation, and the risk of having cash within the operation, which we're all going to have to figure out how to mitigate together. So thank you for your time. Enjoy the rest of the conference.
Thank you.
Thank you, gentlemen.
Thanks, guys.
Thanks, guys.
Yep. Nice to meet you. Good stuff. Yeah.
Pleasure, man. Yeah, you too, man. Finally. Gosh.